institution for each card type, such as Visa, MasterCard, or American Express. The processor recognizes the merchant by their merchant ID and then determines where to send the transaction based on the card number. At this point, the message either goes directly to the issuing card company or passes through the card associations. The next stop on the journey is the card associations. Visa and MasterCard are both associations of member banks that regulate the rules for accepting and issuing credit cards. In addition, they're also at the forefront of governing regulations on security standards to protect cardholder data, as well as the fees associated with card transactions. After the transaction passes through the association, it then travels to the bank or financial institution that issued the card to the customer. Next, the issuer checks the customer's account for available credit or an available balance to cover the sale and responds with either an authorized or declined message. When authorized, a 6-digit authorization number is included in the transaction response. From this point, the response message travels back to the processor, through the gateway, and finally back to the merchant as an agreement to pay the merchant for the amount authorized. For every credit or debit transaction a merchant accepts, each authorization request follows the same journey and touches the same players every time.
So how might the process be different for a settlement message, and when does the merchant actually see the funds deposited in their account?
Essentially, at the end of each day's business, a merchant tallies the final sale amounts and sends one batch file of settlement requests. The merchant forwards the batch to the gateway, and the gateway delivers the batch to the processor. At this point, the processor routes and sorts all transactions in the batch to the appropriate card company or bank for settlement. Often, this is referred to as a back-end processor function versus the front end, where